Hello, today is Friday. It is 4:40 p.m. after the close. Want to keep you aware of what's going on. This is your weekend report. The title is The Stock Market Short-Term Trend is Up. Don't fight it. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. This post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney. That is me. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. In short, we're keeping our clients aware of what is happening. We do this weekly. We do a quick write-up after. We're showing you the key levels of trades we made and the game plan ahead. Okay, so this week was a shortened week. We had 4 days. The common denominator of each day, almost each day beyond Thursday, was each of the days started red. Good buying opportunity brought buyers in at key levels. Last week, you could see I have been adding slowly over time. Got in at 37.43, 37.86, 38.19, 37. You could see the summary here is almost every dip that I bought at key level held, and we did quite well. So you can see we outperformed again this week. We're outpacing since September 3rd, 2021. Honestly, we had not been trading well before that, but the strategy in trading the key levels has helped protect the downside. Is it perfect? No, but we are definitely beating by quite a bit. It could have been much worse, and that's what this strategy is meant to do, is help on the downside. The key to this strategy is having zero bias, going into each day without a bias and saying, are key levels holding? And this week, every key level was tested almost beyond Thursday. Every morning the key levels were tested and were bought. So it's right to remain bullish, and I am actually positioned quite hard here. Thursday, as you can see, I took advantage of a really nice, we gapped up, but we had a nice little dip in there, and I got in at a decent level, bought it 38.77 and sold at 39.03, and reduced half the position. So we are still pressing hard, and I want to press hard. You're like, Jonathan, but we had a red day Friday. A lot of times when I see these types of gains, you need a calm down day, and this is exactly what you want to see. You don't want to see a key level lost, and the key level today was basically 38.50, and we held it, went to 38.60 and bounced back. So really good consolidation. Does it mean we're out of the woods? No, but seasonality is good, and that helps. So here's the chart. If you can see that, we've done pretty decent. The green is us. So let's hit some of the charts. Okay, so for the week, the big 10 stocks that basically make up about 25 to 30% of the S&P 500. What's the common denominator here? Growth got a bid. That's exactly what I wanted to see. When these names are pressing, the QQQ, which is the ticker for the NASDAQ 100, when these names are pressing, it's hard for me not to be bullish at key levels, and they kept getting bought, so I pressed hard. So this was a big reason why I kept pressing hard. Also, the pressing hard areas usually that motivate indexes to press forward, we're doing well. You can see for the week, consumer discretionary, communications, technology. Many of these areas did quite well this week. Now, objectively, you have to understand this is a week. We only had 4 days, so some of this includes some of Friday, okay? So want to be open about that, but overall, the trend is up. That's good. Short term. Let's look at the short term, and we'll start the timer now. Short term, we've been in an uptrend. You can see since we got the early dip, which I bought very, very close to this bottom on Tuesday. It was ugly, not a good start, but it was bought. We consolidated, and each of these dips, almost every morning, I bought, and it paid off. Friday, I did not trade anything. I wanted to see things consolidate and see if this could actually hold. So we're still kind of in no man's land, consolidating. No real reason to sell, in my opinion. The trend, short-term trend is up. Mid-term, the trend is down. But things are starting to look a little bit better here. Seasonality is picking up. which is not surprising. If I show you that chart, that is right here, you can see usually in July we do have a little bit of boost. So could we see a little more of continuation? I do think that is very possible, but key levels that I'm watching, as you can see over here, we want to get above 39.25. That kind of is a buffer that's been really difficult to get above recently. We need to hold 38.65 and 38.95. And if I go to those charts, this will help you. So I condensed everything just to clean it up a little bit. So right here, I do think that we can test eventually this gap and get up here into 39.50. I really do think we will test the 50-day moving average's blue line. So number one, short-term trend, are we above the 5-day moving average? Yes, we are. 38.69, we are above that. So the short-term, the trend is up. That's good. These are starting to curl a little bit higher, which is good. We are also above the 20-day moving average, which is good. So the 20-day is about to cross, the 5-day basically did cross the 20-day, and that's a good thing. It's been a while since this orange line has crossed the gold line. That means we're starting to trend up a little bit. There's some good signs here. This is where we've been stalling as of late and from an RSI perspective, but I still think we could press here. I think people need to play a little bit of catch up. I think there could be a nice week next week. And again, if we open red, I think it just poses more opportunity for people to get in on this dip that have not believed any of this rally whatsoever. So here's all the lines that scare you. But in short, the resistance is 39.25. We need to hold 38.95, which is basically right where we're at. 1 second. This needs to update. There we go. So we're right at support. We are still holding this uptrend here and still above the 5-day moving average. It might take some time for this 50-day moving average to curl up, but would not surprise me to test the 39.50. And that's why I would like to see us get above the 39.25 pretty quick. So overall, pretty good moves this week. And one more thing that I will show you. I did show you the sectors. Here's another perspective. We are right at resistance here on a different time frame. So could we still move here? Yes, this is more of a weekly time frame. So the trend is still up. Doesn't mean every day is going to go up. Again, you could still be in trend in above the 5-day moving average. So the market could still go down about 1.5%. And we'd still be trending higher. Just because we're trending higher does not mean every day is going to go up. I want to make that very clear. The VIX, the fear or the volatility is starting to reduce. That's good. We're starting to see the fear go down, and you can see this channel we finally broke. Doesn't mean it's going to stay that way, but you can see the sectors. Technology got a bid this week. That's basically the summary there. I note in another of the reasons why I did purchase a lot of mainly growth areas this week is the high growth areas had a fantastic week. As you can see, areas like the TAN is the solar ETF. High growth momentum areas are above the 200-day and the 50-day moving average. So that is very good. That's what I want to see. ARK, another high growth area, had a great week. It doesn't mean it's going to continue. I mean, you could draw a trend line here and say, hey, there's not much room left. But right now we're trending higher. And while we're doing that, mistakes that I've made in the past have been taking trades off too early and assuming that it's not going to go higher rather than waiting for the trend to actually stop. So eventually, I believe it's better to wait till we break the key level. So I'm not going to do anything till 38.74 or 38.95 break, probably more like 38.74, 38.70-ish until that breaks. But until that happens, the trend is short-term up, and I'm not going to fight it. That's something that I've learned and did not do well over the last couple years. So one more chart. is the semiconductors. You want to see semiconductors in high growth do well in this market, and it was another nice week for this. Not another nice week, it was a nice week for semiconductors. We wanted to see the semiconductors really get going, and every dip was pretty much bought. Again, it's still very volatile. The VIX is still in the 24-25 range, and that's been kind of a range between 35 and 30 for quite some time. It seems to consistently bounce between 25 and 30 quite a bit. So overall, it was a great week. You can see the performance here. Up 4.07%, beat last week by 3.4%. And again, all we're doing is trading the indexes. So to beat last week by this and beat by this, we're getting good entries, and we're either taking gains quickly or continuously buying at key levels. And that has honestly been what we've been doing, is more buying consistently at key levels. So overall, it's been a pretty exceptional last couple weeks. Not easy whatsoever, but we have traded well, and we're going to go into next week with zero bias. If we go below a key level, I'm out. If we go above a key level, I'll keep pressing. So right now we are pressing hard, as I believe we should, because we're in trend and we're above the 5-day, the 20-day, and I think we have a good chance of testing the 50-day. If not, I will be out quickly to preserve capital. So thank you guys. Just want to get this video out real quick. Overall, great week. Thanks guys. Have a good weekend.